All right, good morning, traders, and welcome to the opening bell. Today is Wednesday, July 29th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start the day with you guys. It is FOMC day, and everyone's on deck for the FOMC rate decision at 2 p.m. and the subsequent presser. We've gotten some headlines in overnight trade. While price action still remains pretty tight, there are some major headlines hitting with oil surging again as Iran this time initiates strikes on U.S. bases in Jordan. They've rejected the Omanian proposal for joint control over the Hormuz. The Houthis are considering a transit fee on the Bab al-Mandab Strait into the Red Sea. And so things are starting to escalate yet again. We're seeing oil prices move higher. The U.S. dollar with a little bit of a swell here as well, but everything held constant. We're still trading at some key levels. So we'll go over all the U.S. dollar crosses as always. Gold, oil. We'll take a look at Bitcoin, which did see a little bit of a bounce off support. So great to see you guys this morning. Hey, Latanya, happy hump day to you as well. Chandra, Ashish, Mesfin, Patricia, Scott, Tom. I'm not going to get to everyone, but great to see you guys this morning. Here's the XY. Nothing's changed, okay? The high day close did hold yesterday. That was level we noted at 101.59. It's the objective high day close for 2026. We did reverse off that level yesterday, snapping a 3-day winning streak, and it puts the weekly opening range in a well-defined zone right above the objective monthly open. 101.22, 101.59. That's the range since the start of the week. 101.21 now converges on uptrend support that we've been tracking off that May low. So again, look for a clear-cut breakout of this weekly opening range. A topside breach still has to contend with 101.92, 101.77. That's the September highs from last year and the September 2024 high day close. Nice pivot all through last year. That's where the yearly high is registered. That's the breakout you need to fuel the next major leg of the advance. Next level up is 102.71. That's a basic 100% extension from the advance off this year's low. So all things held constant, guys, nothing has changed. Momentum is still, it's still constructive technically, but there's not a push in either direction here. So we need to see that range break out. If we break 102, 101.22, key support and the level that would put the bears back in control is a drop below 100 spot 64 into 77. Okay, that's that key pivot zone there that we were testing. First, as the highs from March, but it's also the 618 extension of the advance was the initial monthly opening range low until we broke, quickly recovered. That would necessitate a break to validate a more significant highs in place and a larger reversals underway. So initial support 101.22, bullish invalidation 100 spot 64, initial resistance 101.59, key resistance 101.92 into 77. That's the breakout you need to mark resumption. Now, Fed is on tap. Markets are still priced, interestingly enough, about 35% almost that we will still be seeing a rate hike today. I told you guys yesterday, economists are virtually unanimous that we will not see a hike today, but it's interesting that that divergence is still happening and the markets are still leaving the door open. September is still at 80% that by September we'll have at least 25 basis points in higher rates. The picture changes today because of this new surge in oil prices, right? The question yesterday we were asking is Warsh going to relay a little bit of a rosier picture now that oil prices were back below 80 and kind of coming back a little bit? Did that ease the pressures? Well, that completely refuted. Now we're about 5% up already. So the commentary with regards to inflation is pretty much going to take the entire headlines, guys, for today's release. Now, obviously, we know Warsh is not a big fan of pre-committing or even giving any kind of inclinations to the Fed's next move. So we'll see what today has to offer us. We're still adjusting to this new transmission mechanism, this communication from the Fed with really a lack of information to kind of give to the market. So we'll see what happens today. The level is set, the stage is set for the DXY on a breakout of the weekly opening range. Euro dollar is even cleaner. I'll have a setup on this on FOREX.com in a few hours. Here's what it's looking at. You guys all know these levels. 1355. I don't got to go to the weekly or monthly charts, but you guys have all known this level before. 38.2 off last year's low. The objective, April high week reversal close from last year. That's the low. Uptrend support is there. This is a key critical pivot in price. 1355, 1365. Daily chart has us at the objective monthly opening range low. 1355, 1360 is the objective low day close for the year, registered on June 24th. So again, such a clear setup. That same pitchfork we've been tracking off of the highs from May is in play, okay? Initial resistance at the objective monthly open. That's 1422. Not Mike Boutros' opinion, not FOREX.com's opinion, fact. A breach above this would validate a breakout of the objective monthly weekly opening range. You'd be looking for a rally towards 1492, 1482. This is the broader bearish invalidation. A break, a daily close northbound of 1492 would validate a breakout of the monthly opening range. It would suggest a much more significant low was registered here, and it would suggest a larger trend reversal is underway. So really clear-cut levels. A downside break, resumption of the broader downtrend opens up 1275 and 1214. 1275 is the 2023 objective swing high. 1228 is the objective high day close for that calendar year. That converges, next actual convergence level, that converges on the 25% parallel, basically into the start of next month. Median line here on that 1275 level into the open of next week. But that's kind of the time reference value of those levels. The focus for euro dollar, plain and simple, is a breakout of this key zone. Break below, look for an accelerated drop towards 1275. A breach to the high, you do have some room to test the monthly opening range high, but that's the real level that the bulls need to clear to validate a broader resumptive trade, or a broader, reversal trade, and invalidate that broader April decline. Make sense? All right, don't forget, even though the Fed policy today is going to be the major headline, we still have major data on tap. Tomorrow we get the BOE rate decision. No changes expected there, but we'll be closely monitoring the vote count from the MPC. And then also tomorrow we get those core personal consumption expenditures. We are expecting a downtick both on the headline read from 3.4 or from the core read from 3.4 to 3.3, and even the headline read is supposed to soften as well. I don't have it up here right now. We get the updated GDP read. That's not expected to change. And we get the Tokyo CPI and the BOJ as well into the close of the week. So there's still a lot of stuff on tap. Make sure you keep that in mind. But that's where we are on euro. Now, sterling. We buckled below that May low close. Okay, this was a key pivot in price we've been watching, and we didn't get much follow through. I'll show you the daily and intraday in a moment, but I just wanted to highlight this, guys, from a broader view. Sterling has just been a textbook play. The rally off the low, that was the low close for the year. That was the 38.2 off last year's rally. That rally fizzled out. We talked about the fact that we failed to hold a breach above the open for the year, the 618 of that decline off the April highs. And that failure had us last week looking for a drop. That drop materialized and closed right below that May low. Here's the subsequent losses. You're seeing things start to trim a little bit. Here's what the British pound looks like on the daily chart. Here's that pivot level, the May low, the low close, 33 into 33.26. We sat there for 3 days yesterday. Friday or Monday of this week, we closed just below. And it's been resistance, but there's not been much follow through. So what do we do with sterling from here? Momentum is back below 50. We've obviously failed a breakout of that downtrend from April. Where do we go from here? Here's a 4-hour chart. I added this channel yesterday with you guys. It's still holding, oddly enough. That's a third confirmed touch, so that actually gives validation to that slope. But you can see that momentum is kind of really kind of bearing down here. It's still on a bearish approach, but not by much, okay? And in actuality, you are getting some divergence here with a lower low, series of higher lows. So the downside for sterling at the moment isn't quite appetizing, okay? If we break the monthly open, those dots right there at 32.20, 32.60, look for the extended drop towards 32. But I'd want to see sort of a break of that objective monthly open just to give this thing some leeway and some speed on the acceleration. The weekly open, the level I told you guys yesterday's resistance, I'm still going to stick with that. That's 33.23. That's where we opened on Sunday. If we breach above that, I'm not bullish, but I'm no longer bearish, okay? Because that would refute the break below that 33 level that we've been looking at for the last 2 days. So play this one close to the chest. All things held constant, the weekly opening range is preserved, but boy, that downside bias doesn't really look very appetizing on the back of that decline. So stay nimble here on sterling. Still looking for some clarity. We have the BOE rate decision on tap tomorrow. Maybe that gives us the break. Maybe the FOMC charges a move today, but this is on the watch list for me still. So that's the British pound. Any questions on sterling? All right, moving right along. Aussie, biggest loser on the session, finally getting the move that we were looking for, the reversal off 70 into 70.22. You guys are probably sick of hearing me talk about this range, but it was so critical. One of my favorite setups for the last 2 weeks. Even though it's been a very hard trade and every short has kind of been fizzling out, we're finally getting that move now. We got Australian inflation data and overnight trade, which came out softer than expected. That printed at 3.6% on the core trim mean. Headline came down from 4 to 3.8. So it's pushing back expectations that the RBA will have to hike rates. And that's just propagating this decline, especially in the face of some dollar swell here today. So that break of the objective weekly opening range low and a basic 38.2 off the low, that was last week's range low, tested twice. That broke the uptrend from the start of June. And you can see here, I don't highlight these very often because I don't like people. Let me take that back. I think retail traders chase head and shoulders formations too often when they're not actual viable trading patterns. This is one, guys. This is a good example and a proper use of a head and shoulders formation. My problem with the head and shoulders formation, just as a side note, is that people, anytime they see left shoulder head, they automatically start to look for the breakdown. The point of the fact is the head and shoulders formation has no bearing whatsoever lest the neckline break. That's when it becomes viable. And we got that today. So why does the head and shoulders formation even something we look at? It's because it gives us a measured target level. Take the top of the head to the neckline. That measures 68.98. That converges almost right on with that 200-day moving average. You're basically looking at 69 proper as the next major support level. Just ahead of that, there's this pivot right here, which you must take note of. The objective monthly open, not Mike Boutros' opinion, not FOREX.com's opinion, fact, 69.19. 69.27 is the objective 618 retracement of the advance. Again, not Mike Boutros' opinion, fact. So really clear-cut levels on the downside. If this break is legit, rallies now would need to be limited to that same level, 69.65. Okay. First level of support, 69.20 into 69.27. Second level of support, 68.98 into 69 proper. Obviously, you need a confirmed close below 68.80 to mark resumption. That's the 1618 off the high. That's what caught the low last month. We charged an outside day reversal off that on June 30th. That's going to break. That's going to be the break you need to really fuel the next major leg of the decline, 68.30, 67.50s all day long. But right now, the initial focus is while below 69.65, the threat is for a deeper cut. Next level on tap, right above 69.20. Make sense? A clean setup. It took weeks to pan out, guys. You guys know I've been testing the short side of this for a while, but finally giving way. For us to get, let me take one step back. The weekly open, I just want to highlight that at 69.80. Northbound of that, you're basically looking for another test of the resistance zone. So bearish invalidation, strength beyond the weekly open would put you back on the bullish approach. That would take you right back in the confines of that ascending formation. We'd be looking for a potential breakout of 70.22. So both sides of the trade are very well defined. My favorite setup, biggest loser on the session is Aussie dollar. We're pretty trimmed for the rest of the week on Aussie data. Nothing left on tap. So we'll really be looking for the US to be driving the rest of this trade for the week. All right. That's Aussie dollar. Dollar yen. Or dollar CAD. What am I saying? Here's the Canadian dollar. So we've been talking about 40.96.41. That was resistance. You guys know we've been favoring the long side here ever since that outside day reversal that we made on the 20th. But we kind of trimmed that expectation as we started to falter into this resistance zone. And last week, although we did close above it, it wasn't a very convincing push through. We talked about that on Monday. We talked about it on Tuesday. Here we are failing. So no surprise, right? The low day close comes in at 40.69. If we break below 40.51, that would invalidate that breakout and give you actually a potential resumption towards 39.80. So that's not the assumptive move yet. Right now, the focus is we need to find support ahead of 40.50 if dollar CAD is indeed heading higher. Again, ultimately, I'm still looking at this pivot zone, but now that we've shown price action on both sides, I want to see a break of the weekly opening range high. That's 41.27 to validate resumption. 40.65, 40.55 first level, 618 off the high, 100 off the low. Really nice fib confluence there. So near term, dollar CAD might have some more pullback to go. If we're going to test former resistance as support, losses need to be limited to 40.51. Anything below 40.51, well, that's a break of the weekly low. That's a break of key Fibonacci level. That's a break of former support or current support, former resistance. That would give you the resumptive trade. All right. So looking for an exhaustion low ahead of 40.51. If dollar CAD is heading higher, a breakout of the weekly high needed to strike 41.60, 41.55. Questions on Loonie? All right, making good time here. Dollar yen. So I just put a piece out on StoneX TV about this setup. Nothing has changed from our outlook yesterday, guys. The weekly range, oddly enough, even got tested yesterday as support, reinforcing 63.33. You can't make this stuff up. Remember, 63.33 is the 1618 extension from the advance off the 2025 low. 164 is the 1618 of the advance on the opening range breakout of the year. We're stuck right between those for a fifth consecutive day. Okay, that's your weekly opening range. That's the range of influence we're looking for a breakout. Excuse me, northbound of 64 gets you straight clearance towards 165. That's the next level up. Psychological barrier, but it converges on the upslope here, right into the close of the week, right into the monthly cross. Weakness below 63.33, okay, would invalidate the uptrend. But to get bearish, we need to close below the objective monthly open. That's 62.56. Okay, so that is to say, if dollar yen is heading higher on this stretch, 63.33 needs to hold support. We need a breach above 64 to mark resumption. If we break 63.33, you want to be a little bit more cautiously neutral here, but losses below the monthly open would refute the objective monthly opening range break we got last week. And so losses below this level would put you back on course towards 61.95, 61.68, and possibly lower. So very, very tight range, right at resistance. You're still constructive. You know, we've been talking about the weekly chart showing signs of waning momentum here, but not on a divergent signal, just the fact that 70 is holding resistance. So again, on the weekly chart, clearly, if we breach 74, if we breach 64 and momentum breaches 70, that's your go ahead. That's the accelerated move. The next measured move targets to the upside are 167.55. I added this today, guys. That's the 200% extension off the low from last year. So two equal legs from that low gives you 67.55. Just higher, 169 is going to be the 1618 of just this year's initial advance from the January low. So levels are very well defined. BOJ is on tap. Tokyo CPI is on tap. In fact, let me break this down for you. We actually get a host of Japanese data right into the close of the week. We get retail sales, personal, unemployment, retail sales, Tokyo CPI, all of that into the BOJ rate decision. They're expected to hold rates. But again, we've talked about here in the room how discussions have been coming out mostly, just amongst traders and stuff, that an option for the BOJ to curb this weakness outside of intervention and to fight the inflationary concern is to raise rates. So we'll see if that even comes out as a possibility. But nonetheless, dollar yen is in a pretty well-defined range. Look for that breakout over the next few days to give us clearance. Questions on yen. Approach this one with care. Client sentiment is still extremely net short. Okay. Yesterday we were at 12. We're back at 11. So they're piling up on the short side again. That's something you always want to approach with great care. Okay. Swissy, Mesfin, I see you in the room here yesterday. Resistance holding 82, 82.14 was the major resistance level we were talking about after breaching 81.25. That level is still resistance. That level is the objective weekly range. High slope support comes in now at 81.50s. Yesterday we were talking a little bit lower in the 40s. Now we're at 50. Key support is 81. Below 81, it invalidates this break. And you're talking about the potential that a more significant high was registered. So if dollar Swiss is heading higher on this stretch, losses need to be limited by 81, breach above 82.14 needed to fuel the next major leg of the advance. Slope comes in near 82.80. Next level is the 2023 low, objective swing low at 83.32. Very clean setup, but you're holding resistance right now. The weekly range is set right below it, primed for a breakout. Make sense? Okay, that clears everything on the FX front that I've been looking at heading into the start of US trade. Do keep in mind, guys, we do get some major earnings today with Microsoft, Meta on tap. Tomorrow we get Amazon and Apple. So broader market sentiment still trying to take cues. We've seen that the tech, specifically the semiconductor sell-off in Asia, continues to deepen, right? Kospi lost another 6%. Nikkei fell 1.5, Taiwan down 3.8 after down 5%. So the sentiment still seems to be turning. Now, it's not a straight risk off because you are seeing other pockets in the equity markets start to gain favor, more of a broadening, you could say. But on the, I guess I'll just show you real quick. On the weekly charts, guys, there's some really risk for technical damage. Here's the S&P 500. This consolidation structure we've been in since the high registered back in June has been in focus. We're looking for a breakout. Okay, we're looking for a breakout with the long bias vulnerable below 75.79. That's the objective high close, the record high close. Okay, you drill down to the Nasdaq. That's the one that has the most risk, and I've been saying this, for the last couple of days now. So we broke support at the median line at the 38 at the 1618 extension of the yearly opening range. That's also the objective June low. So the focus here is for a potential drop towards 26,801. That's just the 50 of the rally, but upslope support comes there. So that's the risk on the Nasdaq. The Dow also has some room. We tagged resistance at 52,951 again this week. This is the weekly chart. And so this is the range of influence. Still the most constructive, right? Even if you get a pullback as deep as 50,271, you're still just above uptrend support. So of the three majors, still the one that has the least bleak picture near term. Let's just say that. So a quick look on the equity markets. Gold, nothing changes, but something worth watching today. Okay, so here's the gold chart. You guys we have showed you this many times. This is over a month long consolidation that we've been in, lower highs, higher lows, straddling that 40.74, 40.98 level for the last 5 weeks. If we break that consolidation pattern to the downside, confirm daily close below 39.51 would be extremely damaging for the gold trade, right? There's really nothing that comes into play until like 38.86 is the October swing low. And then the next measured move, 2 equal legs off the high, just from March, gives you 35.69. So it's a very bleak picture for the bulls if we break below 39.51. Watch that as the line in the sand to validate a break of this multi-month consolidation. That's gold. Oil, everyone's looking at oil. So we thought we were ducking back below 79.60, below 80.75. That's the support zone we talked about. That was the origin of the breakout earlier this month. And also the lows from April. It's loaded here, guys. We're back above it. The high day close is right back in focus, 85. If we breach above 85 again, you threaten sort of from a technical standpoint, a broader push back towards 92. So we'll see if the headlines start to improve. I can tell you that I've seen some ancillary, I don't know how the veracity of the claims, but there's been some circulating that the president is extremely mad and using some expletives, saying that he's going to beat the crap out of them, essentially. So look, if things start to escalate and the war intensifies even more, a close above 85 today would put the bulls back in control from a near-term focus. Okay, so that's obviously going to be something that the press pool presses Warshawn today. Let's see what his comments, if anything, about this resurgence in oil. Just when you think things are cooling off, one headline can reverse everything. That's oil. One last look at Bitcoin. So that support structure held yesterday. So we were talking about 63,412. That was a basic 38.2 retracement of the advance off the low. Yesterday we were pushing below it, but we ended up closing above it. So I'm still sticking to the original set we've been talking about for the last 2 weeks now, or last week and a half. We're constructive above 61,244 near term. Okay, if we break below that slope, if we break below the 618, this 25% parallel, that would necessitate a break of the upslope. You're looking again, potentially even lower than 57,885. But if a bottoming process is panning out, losses need to be limited by 61,244. Key resistance on the near term is still 322, excuse me, into 253. Makes sense? Mespin says, makes sense. Thank you, Michael. More than welcome, sir. Sorry, I'm a little bit tongue twisted this morning, but there's a lot of headlines hitting fast and furious. The Fed is on tap. Stay nimble. We've got so many ranges in play, guys, on the DXY, on the Euro, from a near-term focus. So many ranges to keep a focus on. DXY, there's Euro. Sterling is the one we're a little bit least conviction on. Aussie, if we're heading lower, 69.65, we need to hold. Dollar CAD. Looking for a low ahead of 40.51 if we're heading higher. Dollar yen still trading in a very tight weekly opening range. Well-defined targets on both sides. Look for the fireworks. Dollar Swiss also weekly opening range preserved just below resistance. Look for the breakout. Got a lot of plays and a lot of setups in play. We'll pick things up tomorrow morning, guys, with no other questions. Again, stay nimble today, and we'll cover the aftermath and more tomorrow morning. Till then, best of luck trading today, and I'll see you tomorrow morning. God bless.